Bramo, how are you, mate? LinkedIn Live, here we are.
Yeah, it's great to be in the head office of apartments.com. Good team, I see. Most impressive sort of setup, mate.
Thanks,
Congratulations. No, good to be here. And, what a great topic to be talking about as we start a new year.
Yeah, well, it's been an interesting last 12 months, I guess, for the Melbourne market. We've seen, a lot of growth in Queensland and WA. Melbourne's been a bit trickier, probably because of the government's, some of the things that have been going on. But what's your kind of read for 2026? How are you feeling about the year ahead? Is it going to be better than 2025? How does it how are you seeing the cards play out?
Gee, I mean, how long have we got? It's, I suppose the topical point is anywhere but Victoria, the acronym of ABV over the last couple of years. But I think whether you're a developer, a project marketeer, salesperson, or actually working in the industry as an associated service, we've all been waiting for, a heartbeat to come back. And in certain segments within this industry, and I break it up into being, first home buyer, maybe up to 12 grand a square metre, midpoint range of that product that's 14 to 16, maybe premium 18 to 20, and then we go into, maybe more uber luxury 25. We'll talk about over the next 30 minutes how those markets are actually evolving, how are they actually performing, what are the threats and the challenges. But look, we start a new year, we started with a new opposition leader, we started with an interest rate rise, we started with a lot of positivity in interstate markets. And I think when it comes to Melbourne, we're beginning to have conversations with a lot of people, whether it be buyers at a retail level or groups, that people are thinking that maybe Victoria's bottomed out. And for those that get in now, it might not be necessarily 6 months, but certainly over the 12, 18, 24 months, we'll look back and say that this was the actual bottom. So some good opportunities out there.
Do you know, I heard earlier this year, I think that a bunch of apartments have been sold on a new St Kilda Road project and one big line to a channel group in Queensland. And it kind of matches with what we've been seeing from an analytics point of view where, there was like 18 months ago or so, we had more people looking from Sydney at Queensland property than people in Queensland, and that happened that's only ever happened once, and that was it. And now we've seen that kind of same cohort of people now looking in Melbourne, and I wonder how much of that do you think is being driven? Is it the channel groups in New South Wales pushing the Melbourne story from a value point of view?
And probably the Queensland groups as well. The conversations have all been around value. I mean, Queensland's probably still got a little bit more in it. New South Wales is, prohibitive for most, be it at an owner-occupier or an investor level. So when South Australia starts to have a higher median value than Melbourne, Western Australia's had a great run. Anyone looking at the property clock would probably start to look down south and realise that, Melbourne is on the verge, I suppose, of a bounce back. And yeah, sure, we've got challenges down here with consumer sentiment and, whether you're left-leaning or right-leaning, I think most people are realising that, Jacinta Allen's government hasn't really been pro-property. We've seen something like 28 increases or 28 new taxes in property since 2012. 48% of their budget is actually based on property tax. Yeah. So we know that, many people who are owning property at the moment are really scratching their head and saying, is property the investment moving forward? And, the answer is yes, but we just need, I suppose, a few things to change. And people will begin to dial back and realise that, as a medium to long-term hold, as an investor, property still has a lot to like about it. This market is an interesting one. It is challenging, but, there are buyers out there and there's opportunities for buyers at a retail level to really dial in and get great value, go a little bit firmer on the negotiation and, really challenge some of the developers out there regarding their value proposition. But if they're prepared to do the legwork, I think they're going to look back and be well rewarded for it because there's some great deals out there. And for those that are downsizing also, at the top end, whether that's 2 million, 3 million, 4 million, 5 million plus, construction prices aren't coming back. We're certainly seeing at Colliers from the acquisition side, land value, particularly for good sites, is not coming back. This is the new norm. And a line in the sand. And I think probably moving forward, things will start to trickle up and become a bit more expensive.
And what do you think about for developers? What sorts of projects, like what would be a great project for you guys to be working on right now, given the state of the cycle? And I think as we often talk, you and I talk about, is like, it's always markets within markets. And to paint the kind of Melbourne market as a whole is kind of not doing it justice because there are certainly pockets of opportunity in different areas and different cohorts and stuff like that. What are the cohorts or the product types that you think are going to have a good run in 2026?
Look, it's a good question. I'll start by answering that by saying that any developer needs to ensure that they understand their demographic. They need to know who their end user is. And the reason why that is so important, not just from a marketing and a narrative perspective and a communication strategy perspective, it's around getting sizing right. And I think
on the apartment
sizes, it's absolutely critical. When we're looking at construction prices and the way they are at the moment, you cannot afford, whether you are selling to investors or first home buyers or downsizers or the uber rich, I should say. You need to have a product that at the end of the day is well designed, but more specifically, the price point in nearly all of those cohorts is critical to making sure that you're not overpriced or, I suppose, more expensive than your competitor. So if you're looking at first home buyers, it's not a matter of having, or an investor, 56, 58 square metre ones. 50 to 52 in most markets is where it needs to cap out. And 2 beds, once again, investors and first home buyers, it needs to be 72 to 78 square metres in most markets, unless it's a downsizer where you can afford to be a bit bigger as well. So to answer your question, I think all markets have great opportunity, but it's a matter of making sure that the product fits the end consumer.
Makes sense. And shout out to Matthew Hayward. Good afternoon to you as well, sir. Appreciate you jumping on. And any questions, feel free to drop them through and we'll have a chat about them and get them in the mix. So do you think the kind of main thing at the moment is about, are people still, and not to overgeneralize, but is it really about pushing the price down for that consumer? Or do you think different cohorts kind of assessing different stuff? And
Good question. It's not always about price. I mean, it's a value proposition at the end of the day, whether you're actually selling to any of these demographics. And I think that's where we're seeing a flight to quality. If you look at a number of developers out there, whether it's Casa, whether it's Orchard Piper, whether it's Cbus, whether it's Piccolo, whether it's Milieu, whether it's Carpe Group, any of these sort of developers that are investing in their brand, Multi for another one, as I start thinking about those that, where we work either closely with or respect and admire. Buyers are never been more educated. They've never been more discerning. They've never had so much information available to them. I spoke to you a couple of years ago in regards to the project for Breaker in Collingwood and Fitzroy at the time, and the investment that we need to make in choosing exceptional consultants along the journey to ensure that when we do hit the market, people have no reason not to proceed. The architect box is ticked, the location box is ticked, the interior box is ticked, the communication strategy is ticked. The interiors are ticked. There are enough challenges out there, heaven forbid, over and above a developer that doesn't fully understand its market or the positioning or the branding or the architecture and the overall execution. So to answer your question, Bertie, we've never seen so many more competent and qualified and discerning now developers in this marketplace.
There used to be so few of them, eh? Yeah. I even think back 5 or 10 years ago, and they were kind of brand led and, I think their vision has just changed. They've realised that they're in this for the long haul. Their brand matters. Their reputation is critical. Yeah. And as a result, the consumer comes first and foremost, and every touch point needs to reflect their promise, their vision. And as a result, this industry is becoming so much more professional, and it's so much more enjoyable to be working in, because the end product for those developers I've mentioned and more are one that when you look at render and representation, it's being followed through in delivery. And that's quite exciting, obviously, from a sales and marketing perspective. So going back to your question, I think it's those developers that are actually creating success in a challenging market, as opposed to those that are looking to cut corners and maybe are in a project now and maybe might not be in the industry in 5 years' time. Yeah, 100%. And I think it's kind of even originated with Gurner, BPM, where I know you had worked.
Cut my teeth.
Yeah, cut your teeth, and the Milus and the Neo Metros and co. And as you say, it's kind of that kind of style of developer who have kind of really focused on delivering on the render versus reality stuff is really, lifted the whole Melbourne market. My next question for you is kind of, when you're talking to your guys that are in the displays and whatnot, how much of the time are these consumers assessing different brand new developments versus established property, and what are the kind of key things that they're finding is resonating with buyers about buying new?
Yeah.
Because often there's a price gap, right?
There is. And unfortunately in Melbourne, that price gap between established and off the plan at the moment can be upwards of 30%. And that's probably one of the greatest challenges that we're actually seeing at the moment. Yeah. So what we need to dial back is, why would someone buy off the plan today? And as we know, there are great deals to be done with developers. There's an opportunity to probably buy buildings that have been better designed, better built and better finished than what they've ever been, which really separates it from the secondary market and what's been delivered in the past. Thirdly, it allows people the opportunity to save money for their deposit. Okay, so they're actually looking out and being able to put a plan in place to be able to say locked in now and delivered in 18 or 24 months and allow people to get their finances in order. It also provides stamp duty savings for most buyers. So what we need to as an industry in a marketplace like this is to be able to have a compelling proposition to be able to say, okay, we know that there's properties out there that are 1 or 2 or 3 years old. And at the end of the day, if you cannot control it, do not worry about it. But what you can control, look at and focus in and to make sure that you separate your product and your offering to allow you to get to first base, to have a conversation with a buyer and be able to hopefully navigate that through to a sale.
Great. And so in terms of
sorry, just to go back, Bertie, I probably didn't actually, it's hard to know when people are coming in and engaging with you as to how much money, how much, I suppose, information they're willing to share. How many buyers are we losing to establish? Look, there is a compelling price proposition with established at the moment. There's no doubt about it. How many buyers we're losing to that? That's hard to probably actually determine. But nevertheless, there's a number of projects out there across a number of different suburbs. So the consumer's probably never had it so good.
Yeah. And do you think where are kind of are there any pockets of Melbourne that you feel have too much product right now?
Yeah, look, I think, Fitzroy is an interesting example. It's no doubt one of the most desirable, sought after and attractive suburbs. And as a result, developers, I suppose, flight to quality went in hard there 6, 7, 8, 9 years ago with acquisitions, gone through permit planning, now on the marketplace or under construction. But Fitzroy, even though it's got that competition, at least you know that there are buyers there, albeit a number of projects probably chasing, fewer buyers. But it's a suburb that people want to live in. So, if you've got the right product, you're at least getting to first base and having conversations. Eastern suburbs look interesting. Once again, flight to quality. But if you are a buyer out there at the moment, predominantly a downsizer with 3 to maybe 6 or 7 million to spend, there's a number of projects throughout the eastern suburbs that I know that agents would be keen to talk to. Qualified buyers looking to actually downsize into premium projects. Outside of that, there's not really an oversupply in the CBD we're facing. We've got a great project there in Atlas. That's been probably the most successful project in Melbourne over the last 18 months. We've had over 550 sales there.
Amazing.
Collins Wharf, their latest tower's been launched. That's been quite successful. Along St Kilda Road, both Orchard Piper's Carter Building and Seabus's 437, both out of the ground and under construction. So we've hit construction funding targets there. We go to Cass's project on Chapel Street, 671. That's out of the ground and under construction. We're marketing an absolute beauty at the moment, Bertie, in Barry Street Q. Piccolo, I think most of us would acknowledge they set the benchmark in Melbourne for premium and prestige. That's an interesting strategy. We're talking to people that for the first time, maybe in even their lives, they're looking at downsizing from a home they may have lived in for 30, 40 odd years.
I drive past it every day.
Do you? Yeah. And that's a conversation that our sales team have got to realise that those sales can't be rushed. They're conversations that are being had with people that take a long time to process information. They'll talk to family members. They'll talk to everyone in regards to are they making the right decision. And that's been well received, albeit from meeting through to finalising, that can often be a 2 or a 3 or a 4 month process from when you first meet the buyer. So it's interesting as you go through these projects and you're dealing with different cohorts of buyers as to the lead nurture, which obviously you'd be well aware of, the actual process that you actually go through from meeting someone to then hopefully selling them something.
And how much do you think the agent's kind of role in the process has had to adapt, given we've kind of go from like relatively short period of time of engaging through to, I think 3 months is probably like a relatively short period of time at this stage, particularly for the downsizer market. Like, how do you keep the buyer engaged over that kind of longer period of time?
Well, that's content and having a good CRM and having the ability to curate messages so that, you're targeting specific people with the right information at the right time. You'd know that better than anyone. Salespeople have had to learn to be a lot more patient. It's the funnel of getting people in at the top and, ensuring that at critical points, 7 days, 14 days, 3 months, 6 months, 12 months, 18 months, that we're there. We're aware of what they're looking for, what's important to them, and having information in regards to what are they actually looking for. Are they a downsizer? Are they a first-home buyer? What's their price point? What's important to them? And ensuring that when we have those conversations, it's a personalised, targeted approach so that we can strike when the opportunity's there.
And what kind of role do offers and building scarcity play? Because I guess like when there is more product out in the market, it's harder. There are less buyers. Are you guys finding that you need to provide people with, specific types of tailored offers based on their situation, or is it about holding firm to make sure the feasibility? Like, how do you manage all those different conflicting priorities?
Look, that's a really topical point at the moment with a lot of developers. What's quite interesting in the marketplace at the moment is access to credit, and as a result of that, which has been quite healthy, quite strong, quite open, a number of competitors in that place, you've actually got a lot of developers that are actually got a pre-sales requirement that is significantly less than historically has been in the past. So what we're seeing is that developers are, there's a term that we use in the office of kicking the can down the road, and that is breaking up a building into sometimes 2 or 3 strategies. What do we need to get to the construction, I suppose, funding hurdle? And that's often when a developer is most aggressive. That is where a developer is actually open to, looking at those apartments that are most likely to sell, those that they're actually happy to be sharpest on in a price point, or those that they're actually happy to engage with incentives. So in that sort of situation, we put strategies in place to make sure that we understand what the priorities of the developer to get the project out of the ground, and then we go into stage 2 and stage 3.
And so there are different offers for different stages, different degrees of flexibility from a pricing offer point of view.
Yeah, 100%. I mean, at the end of the day, developers have never had it so hard. It's as simple as this. We've had a 30% increase, give or take, in construction costs, and we've had minimal movement in GRV.
Yeah.
Now, when most return on investments on these projects is anywhere between 12 and 20%, I mean, do the maths. I mean, it just doesn't work. So that's why we're seeing a lot of projects not getting out of the ground. And those that do, there needs to be, a way to make it work. And is that setting a new benchmark? Is that something that was previously 18 that now can be 20 because, the position warrants it, or the overall offering is compelling enough to be able to convince someone to do it? And sometimes it's a little bit of developers taking a 6 or a 12 or an 18-month sort of view line, and that is, right, let's get to stage 1 and get out of the ground. And then once we're in stage 2, let's see where the marketplace is. And let's hope that in the next 6, 12, 18 months, we see a little bit of uplift too.
And what do you think it is? Like you mentioned before, you thought that we're kind of getting towards the bottom, which I think is correct. What will be the early signs that we're kind of moving out of it? Because to me, when I've seen these kind of markets in the past, oftentimes we start hearing the channels are back and the channels begin underwriting the projects, and then it kind of starts building from there. What are those sorts of signals that if you were sitting on a site and you were the developer, that you'd be like, yeah, cool, this is the sort of thing I'm looking to, the right kind of signal?
Having a close relationship with a project marketeer that knows what they're actually talking about and has the relationships both in the off-market channel sort of space, and also having competent salespeople at a retail level that can provide you with that sort of feedback. I mean, obviously inquiry at both sides, both channel and retail, is where you start to see the canary in the coal mine sort of situation. We're seeing channels engage with us right now, inquiring on Melbourne stock.
Yeah.
Because they can see that on a square meterage basis, albeit it's more expensive than what it was, it's still compelling value compared to Interstate. So those conversations are taking place right now, and we're seeing channels come back, and I think 26 will start to see channels moving certainly more before retail, and then hopefully retail will come. Retail will move a lot quicker once we get, I think, stability around interest rate rises. The 25 basis point wasn't the issue. It was the narrative around some people saying it's the first of 2 or 3.
Yeah.
We need to, ensure that, the Reserve Bank Governor General, I think Michelle Bullock is her name, she made it quite clear. I mean, they will look at the data, and she has never indicated that this is the first of 2 or 3 rises. So people just need to have a cool head and realise that we could be at this level for another 6, 12, 18 months. The next one might be a reduction. I mean, who knows what's going to happen overseas. So the retail side of things, what we'd love to see is the established market pick up.
Yeah.
And if we see the established market pick up across all these markets, we'll see downsizers that will see their homes are worth more and become a bit more of a compelling proposition about maybe having some money left over, selling a $5 million home, buying a $3 million apartment, parking some into super, or maybe a secondary property for personal purposes. On the first home buyer side, the established market needs to pick up because that's still compelling probably proposition for a lot of them that are leaning towards maybe looking at secondary property rather than brand new property at the moment. But as soon as that established market picks up, off the plan will be back on again.
And we spoke a bit about kind of where there may be some, not oversupply, but just more supply relative to other spots. Where do you think the kind of opportunities are from an undersupply point of view? And I know Colliers kind of headhunted you to bring you on to help with more of the metro side of things and build out that capability. Where in the metro kind of areas do you think, and is it townhouses or do you think it continues to be apartments?
There's no doubt townhouses have been the flavour of the month for both channels that are focused on, I suppose, trying to get an investment that is likely to show capital growth in the short term. And the other market that I think is beginning to show up. Look, this metro market, activity centres, rezoning, what we're seeing with the Labor government is obviously encouraging supply through the middle ring. The reason why that's probably not stacking up at the moment is, once again, we're not just seeing the square meterage rates to support the construction costs. Okay, so that at the moment is at a hiatus. Great that we're seeing rezoning, great that we're seeing initiatives around supply, but not much use rezoning an area that is going to command 9, 10, 11, 12 grand a square metre when you need 12 and a half or 13 to make it stack up.
Yeah.
But to go back to your point, the townhouses have been flavour of the month, and they've both been across greenfield because of price point, where you can still maybe land something 30, 40 Ks out of the city that's been hitting 650, 750 grand. They're sitting on 120, 150 square metre blocks. They're often 3 stories in size. And that seems to resonate well with both the end investor and the channel group and the land developers in providing that product. We're about to launch a project in Melbourne East, incredible value, price from 1.395. That's going to go like hotcakes because that'll be both an owner-occupier and an investor, a more discerning investor, obviously maybe a more white-collar AB demographic type investor that's putting in property that can afford over $1 million. But townhouses have certainly filled the void for a lot of people in the industry, both in house and land and in the channel market, that have been able to hit that sweet spot.
And I guess for the CBD, I mean, you guys are doing more than pretty much everyone in terms of that city focus.
Yep.
What's the role of kind of I saw we had a question through regarding foreign buyers. Do you have a feeling of like, what is the foreign appetite for Melbourne investment properties, particularly in this city?
Thank God for them. I mean, at the end of the day, they can only buy brand new, and as a result of that, they can't look at established. So, you've kind of like got this marketplace where you've got a cohort of buyers that are forced into buying brand new and forced into paying the new square meterage that's required. So, thank God they're there, because that's supporting, I suppose, many of these buildings that wouldn't get out of the ground at 14, but people will pay 17, even though there's established stock competing at 12.
Yeah.
That market, we're active throughout Malaysia, Singapore, Taiwan, obviously China, Hong Kong. All of those markets are running at different temperatures at the moment. There isn't as much demand, obviously, as what there was in the heyday of 5 or 10 years ago. But when you're crossing across so many countries, we're still able to execute strategies that encapsulates all of those countries to fill the bucket for our developers. As I said, Atlas is a great example of that on Latrobe Street. Queen's Wharf is getting really good inquiry. There's not much in the CBD. I mean, there's just not many sites, full stop. We've got Sime Derby that's come in, that's bought a site up near the car park. I think that's going to be north of 800, maybe 1,000 apartments. The groups that we play with in that space, they're clamouring for the position and opportunity to get first crack at that building. That'll be, the first one we've launched for some time in the CBD, and there's just not many opportunities left.
And I guess whenever I go to Queensland, Southeast Queensland, Gold Coast in particular, we had a question from Michael Lavelle, appreciate that. He's asking about, coming from the Gold Coast, most people up here think you've got a wealth of builders at every level in Victoria. So is it the buyer demand, the build cost, the value, versus value, product, location, government that's slowing down the resi market? I guess the question is like, is there a builder problem here, or is it in fact, as the Queenslanders think, a plethora of builders and that's not the issue? What do you hear from developers?
Yeah. Look, I think it's a bigger issue up in Brisbane with the builders, to be honest. I mean, they're going through something similar to what we're going to, but ours was probably more of an infrastructure issue where, the government was draining so many of the resources and talent and trades, I suppose, towards infrastructure build. But to your point, we don't have a shortage of builders. Maybe at tier 1 level, we probably do. There's only a couple really in that space if you're building, the biggest and best in town. But the shortage of builders, I'm not going to say that is an issue, but there's no doubt that builders are in a lot better position than what they were 2 or 3 years ago. Trades are obviously an issue, and that's part of the overall mix. But look, there's still competitive price tension out there amongst builders, but I think most of them are now able to get the margins that they want, and if they're not too concerned because there's still pipeline of work and developers out there to engage and work with them.
And I guess on a similar note, Matthew Hayward asked about, the standards of quality and workmanship since COVID. I think previously there was some consumer sentiment around, stuff that's been built recently is not as good a quality. How do you hear from your agents that that's an ongoing concern for consumers, or is that what's your read on that?
It goes back to, I suppose, the point I was making before, that there's a flight to quality and there's a flight to brands and there's a flight to reputation and there's a flight for those where you can look at what they've delivered in the past. So is the point relevant? Yes, for some builders and developers that are probably playing more at the lower price point, but we've moved on well from, the flammable sort of materials sort of issues of 10 years ago. A defect's still out there. Yes, of course, that's just part and parcel of building. Is it a big issue? I'd say it's probably more constrained to the lower price points where you're dealing with maybe those developers and those builders that aren't as brand conscious or as reputational conscious as, the ones I've mentioned before, which are all very much customer focused, brand focused, reputational focused, and have good strategies and things in place to ensure that people that are buying off the plan are well looked after at settlement and beyond. Look, most of the guys we deal with now have 6 months, 12 months sort of defect liability.
Yeah.
Often beyond, the minimum legal requirements, often beyond what you'd be getting if you were putting a family room on the back of your home. So most developers are out there, stand behind their product, and there's good reasons to, because with the advent of social media and everything else that's out there, if you don't,
there's nowhere to hide.
There's nowhere to hide. Yeah.
And it's already been 30 minutes, so down to the last, any kind of final thoughts or, anything to kind of share?
Look, I think, there's still challenges out there, but I think for everyone that's working in the industry, particularly those in the sales and the marketing space, is, continue to work with the best people, continue to stay positive, continue to find ways to be successful, and at the end of the day, just be solutions orientated. I think those that, continue to think that way and act that way, you'll find an outcome is there, and continue to move forward and be successful.
And on that note, Bramo, it was a pleasure, mate. Thanks very much.
Bertie. Great to be here. Thanks, mate. Cheers.
Thanks to everyone that tuned in. Good on you.